GSTR3B in today's session. Form GSTR3B. Before we get into this form GSTR3B, basics which revolve in relation to form GSTR3B. First aspect, it is a written on self-assessment basis. Then you have your availment of input tax credit, which travels to your credit ledger. Then you have your outward supply, on which we need to pay tax. So we will have a disclosure. Please keep in mind, like we have accounting standard 1, which deals with your disclosure of accounting policy. Similar to your AS1, we have GSTR3B, where we will make a disclosure of how much input tax credit I am availing. Also, I am going to make a disclosure of what is my outward supplies on which I have to make the payment of tax. Fourth, payment of taxes. Payment of taxes. I would be explaining the GST office how much is the tax I am paying for current month, maybe for the previous month or tax period, and other payments. Now, we will have a small example to understand how this 3B is going to work. Let's take one simple example. Say there is an audit which is happening, GST audit, which is being conducted for financial year 23-24. For financial year 23-24, the officers have done their audit and they say that taxes to be paid, say rupees 2,50,000. But actual paid, they say 2 lakh. Let's assume that this is on account of IGST. On account of IGST, they found that there is a gap of rupees 50,000. Now, we are currently in the month of January 2026. This 50,000, when they have to, they have made a demand. I can do this way. I can agree and pay. Yes, sir, there was a small clerical error. I have to pay but not paid. I admit. Or I disagree and litigate. I would say that no, your demand is wrong. I would explain. So I go for a litigation mode. So here, when you look at this particular payment, we are in Jan 2026. Option 1, scenario 1, I agree. Scenario 2, I disagree. When I disagree, there's no worry. I go ahead and give my explanation. They may agree for my explanation. They may disagree with my explanation. This is where the litigation starts. They propose to pay. I disagree to pay. Then they will issue a show cause notice. Then I'll give my reply. Again, they will give an order. I'll go for an appeal. Again, they will give an order. Again, I'll go for a further appeal. So I keep on fighting till Supreme Court on this matter. Now, scenario 1, when we talk about agree to pay, here comes a point of worry to understand. Now, scenario 1, when I have agreed, now should I pay through cash ledger or credit ledger? how do I make this payment is a point of worry. Now, cash ledger, whatever money is there with me, I deposit it in the bank account. From bank, it goes to the electronic cash ledger. I make a payment. Now, when it comes to credit ledger, now this is a credit earned or accrued to me during 25-26. Financial year 25-26, this credit got accrued to me. Now, can I pay this 25-26 credit to offset a liability for financial year 23-24? Now, this is what a worry which comes into picture. This is where there's a provision called Section 49, which talks about your payment of taxes. Payment of taxes. Let us have an understanding of this provision, payment of taxes. Section 49, payment of taxes. Payment of tax, interest, and penalty and other amounts. Here, somewhere they talk about order of payment. You can see subsection 8. Every taxable person shall discharge his tax and other dues under this act or rules made thereunder in the following order. So they have given an order. How do I make the payment? Self-assessed tax and other dues related to returns of previous tax period. So if there is a self-assessed tax pertaining to previous tax period, that should be paid first. Self-assessed tax and other tax related to the returns of current tax period. Any other amount payable under this act or rules made thereunder, including demand determined under 73, 74, 74A. So this is the order they have given. Now, point number 1, self-assessed tax. What do you mean by self-assessed tax? This is a tax which I ascertain that I have to pay. Now, self-assessed tax pertaining to previous tax period. Is there any possibility that I have ascertained for the previous tax period but not paid? Is there any possibility? Now, seems like not possible. I'll come back to the Word document to make you understand this. Keep in mind this provision called Section 75, subsection 12, which I have explained yesterday, self-assessed tax. Now, the gap between R1 and R3B is your self-assessed tax to be paid but not paid. To be paid but not paid. You remember, yesterday I gave an example where there is a contractor. In R1, I have shown 18 lakhs as my output tax. In 3B, what I have done, I just showed 18,000 as my output tax. Now, why? They don't have funds. So this gap, what you are seeing here is your that self-assessed tax to be paid but not paid. So early, like this rule 88C, 88D, what I have explained to you yesterday, this came into picture of late in 2023 or. So initially we didn't have this mechanism for online notices. The moment there is a gap, input tax credit, output tax credit, automatic notice which was coming. This came into picture later point in time. So initially we didn't have this concept. So that is a point in time where your section 49 gave these three options. Option number 1, self-assessment tax of previous tax period. Option number 2, our chronology, self-assessment tax of current tax period. Option number 3, tax ascertained by the officer under section 73 74, 74A. This is what they have said. So there could be a scenario like this where I have filed GSTR1, I have filed 3B, but there's a short payment of tax in my 3B. This is your self-assessment tax to be paid but not paid. So on account of this is where our 49 talks about this scenario. Self-assessment tax and other dues related to returns of previous tax period. So there could be a possibility. Till we had this rule 88, let me just open that also. Rule 88C, Rule 88D, dealing of difference in liability, statement, outward statement, and outward return reported, GSTR versus 3. So this particular rule came in somewhere 2022. So till that point in time, when we were reading this section 49, so this was the original version where they, the day law was written, they didn't anticipate that this kind of 88C, 88D would come into existence. Like, no, we don't know what may happen in future, right? So that point in time, they have carved out this provision saying that, look, whenever there is a self-assessment tax which is not paid, first let that be paid. So this is a order they have given. So when we talk about this particular scenario, our earlier question, payment of this input tax credit, which was accrued in the financial year 25-26. Can this be paid for 23-24? Answer is yes, because your third or scenario gives you leeway. So please keep in mind, when there is a demand, maybe on account of GST office who have given a show cause notice, or maybe self-assessment tax of previous tax period, that I can very well pay in current tax period. Now, where across we will have this scenario, I'll give one more example. So let's take this way. Say there is a seller, there is a buyer, seller XYZ Limited sells goods to say X. In turn, buyer X sells to ABC and Co. ABC and Co. Let's assume that month one, sale happened for 1 lakh. This particular sale, there is a margin of 20%, and this was sold again to ABC Co for 1,20,000. Now, assuming that month one, there is a default by the seller who XYZ Limited. But X made an entry of purchase, made an entry of sale. Both were disclosed in GSTR1 and R3B properly. Now, for X, no, he has to pay, like if you look at X position, he has a ITC of, let's assume 18,000, and he has an output tax, say 20,000. This is a position. Now, to pay this output tax, this input tax credit of 18,000 is required. Because there is a default XYZ Limited, there is no input tax credit available over here. To whom? To this particular gentleman. So, this gentleman would have been in a situation where he will say, okay, instead of paying 20,000, I'll pay only 2,000, or this is option one. Option one, he will pay only this 2,000. Or option two, entire 20,000 is paid where how ITC avail though no credit. Though there is no credit. So the GST office will say, look, there is no input tax credit, but you have voluntarily entered this ATC. You have entered and availed voluntarily. Though there is a default from supplier, you have shown as if you have purchased, like only in the books you have 18,000. In GSTR2B, there's zero credit. So what this gentleman X has done, X will say, sir, I have a credit of 18,000 and balance 2,000 he is going to pay through cash ledger. So this is a scenario where I may land up in this situation where self-assessment tax of previous tax period. Though there is no credit, I have availed the credit. Now, assuming month 3, month 1 is gone, month 2 is gone, month 3. Month 3, the GST of XYZ Limited has been cancelled with effect from month 1. Now, this is a scenario where this gentleman X will never get this input tax credit of 18,000. So, in month 3, when this is a situation, this lands up in the self-assessment tax of previous month paid in the current month. So, what X can do, whatever input tax which is accrued in month 2, accrued in month 3, that can be utilized to make the payment of this 18,000. So these are the practical scenarios where section 49, where we have been specified with this order, comes into rescue for us. Clear? So this is something which respect to payment of taxes, what we need to understand with respect to input tax, output tax, finally payment of taxes. This is what they talk about. Coming back. Now, the broader view of GSTR3B, the purpose of GSTR3B. Government wants to know, they wanted to know, what is your outward supply? What is your inward supply? Now, when I say outward supply, they have these bifurcation. One is taxable supply, where we have to pay GST to the government. Second is, say, zero rated supply, which is your exports or SEZ transactions. Third category, exempt, nil rated, non-taxable. Finally, we have one more limb called non-GST supply. So government wanted to understand whatever outward supply is there, this outward supply, they wanted in these 4 buckets. They wanted you to disclose what is your taxable supply. The moment I say taxable supply, along with the taxable supply, what is the tax I have to pay to government? I'm going to make a disclosure. Zero rated supply, that is actual exports or supplies to SEZ. Third, your exempt nil non-taxable category. Fourth is your non-GST supply. Now, there is a slight difference between non-taxable supply and non-GST supply. Non-taxable supply, like your petrol, diesel, alcoholic liquor for human consumption. Now, these aspects I call as a non-taxable supply. So they wanted to know, as a business person, what is your turnover? What is your outward supply? So from where I get this particular outward supply? Now, when we have this P&L account, debit side, credit side, this is my expense, this is my income. Anything which comes on my P&L on account of receipts or accrual, what I record, these transactions is called outward supply. In addition to your P&L account, you have balance sheet. In balance sheet, you have liabilities, assets. In liabilities, you have your current liability, that is your advances. Advances, receipt. Any money received in advance, I would have obligation to pay GST on services. So this also I would be showing as a taxable supply when I file my GST 3B, that is monthly tax return.
In balance sheet,
yes,
advances in respect of services or in terms of supply also is liable to be tax.
Okay. When we say supply, supply may be for goods, supply may be for services. So only advances for services. Only that they are asking us to pay GST.
Okay, either it's supply of goods or paying services.
So here, when we start our activity of filing GSTR3B, our main objective would be analyze your credit side of P&L account, analyze your current liability. All these elements would travel to my GSTR3B. This is your basic understanding, outward supply. Similarly, inward supply. This again, they have bifurcated like this. So inward supply, ITC availed. Inward supply, ITC not availed. That is your ineligible. ITC which is ineligible. Then inward supply subject to RCM. I have purchases, we call reverse charge mechanism 9394. Those inward supplies on which tax needs to be paid under reverse charge mechanism. Then last but not least, ITC on hold. You remember 4B2 electronic credit reclaimable statement. That electronic credit reclaimable statement is something they wanted to understand. So this is a broader view of input tax credit they want you to mention. What is it I am going to claim ITC? What is that I am not going to claim ITC? Why? Block credit or ineligible credit? What is ITC? I have to pay tax under forward reverse charge. ITC on hold. Now, this is a bifurcation with respect to my inward supply. From where do I get this data? This data, this will come from your purchase register. Plus your journal vouchers, all on account of your expenses. Whatever expenses I'm going to record, there we need to analyze. Now, the way the returns are designed in India, honestly, they have kept in mind the voluminous of transactions, the complaints level of the business people in India. They felt that not 100% they are going to be accurate and truthful when they file their returns. When we talk about people, when we talk about developed nations, like example, UAE or Singapore, they have the fear of complaints. None of the businessmen in general will say, let me evade payment of taxes. Especially in UAE, this aspect of tax evasion is next to zero. This is a level of complaints in developed nations. Now, in India, we are yet to reach that particular stage. So keeping that in mind, a lot of automation was done to have these figures controlled and managed. So what they have done for this? Now, when we talk about your outward supply, they don't trust what we file. So they'll ask, give me your bank statement. Also, they'll ask me to reconcile this with my 26 AS, that is your income tax portal data. There is something called TDS or TCS under GST law. When I'm doing a civil work under section 51, the client deducts TDS. When I'm doing a supply through e-commerce operator deducts something called TCS. So there are, in addition to this, you have one more item called e-way bill, right? So whatever outward supply on self-assessment basis under section 59, I'm going to disclose. The GST officer is going to reconcile this particular data and ask why there is a gap. So by default, whenever we do the GST filing, the expectation from the GST officer is that you file your returns, the turnover what you have disclosed for e-way bill, what your 26 CAS is, or what receipts you have in your bank statement should match with your GSTR 3B. This is the expectation. So month on month, when we do this filing, what we need to do is you need to look at your Tally or ERP or SAP, whichever is your accounting software. First, you will take the sales data from here. This sales data on a monthly basis, we reconcile with e-invoice report. We reconcile with e-way bill report. We reconcile, if at all, TDS or TCS is there. We reconcile with these information. This is where monthly activity is done. To give one example, let us take e-commerce transactions. So there is a supplier who sells the goods through their website. There is a supplier who sells the goods directly, which they call as direct orders. Then he sells through e-commerce operator platform. Right? So I have different source of mode of sale which happens. Website sales, I get a payment through Razorpay or CC Avenue. These days, no, when we have this online sales, I want money to be collected upfront. Now, these are the payment mode I have. Razorpay, CC Avenue. Paytm not being used much. Razorpay and CC Avenue, these are the payment modes. Now, these payments which reflect in my bank statement. Direct orders, I may get money in my bank or cash to some extent. E-commerce platform, I would have bank receipts. I also have something called TCS report. I have TCS report. So here, whenever we do this compilation of sales data, our activity should be understand the business model. What is that they do? And what are the modem of sales they have? Now, these modem of sales, whatever reports we have, does it match with this sales data, what I'm going to file? This is our primary objective we need to keep in mind. Now, when I'm talking about this, there's one provision under GST law called Section 9, subsection 5. Section 9, subsection 5, where e-commerce operator or e-commerce aggregator has to collect and pay tax directly to GST authorities. There are small-time business. See, the way the tax provisions are written, it's like a Chanakya way of working. Government wants money. Now, every person who does business, when government wants to levy the tax, it's good to levy the tax, but administration, collection of those taxes is quite complicated or quite impossible. I'll give one example for this 9.5. Way back in 2013, uh, 2000, 2002, 2003 point in time, we had sales tax to VAT. There's a migration which was happening. Uh, like we the professionals think of fraud, financials control, etc. Even the tax officials have this challenge to recover the tax properly from the dealers. So that point in time they made an attempt to target the restaurant business. Restaurant business is something where majority is cash and carry. Like people come for like idli vada, tea, coffee, or whatever. They give 5 rupee, 10 rupee, and they buy. Now, most of the time, it's like the tokens where it's not recorded through a billing system. Now, what is the guarantee that what they disclose to the government and what actually sale happens? There's no tallying thing. The fellow who disclosed monthly, sir, I'm having 2 lakh turnover. That fellow would have 20 lakh turnover, which he says only 10% as my turnover for payment of tax. So government people have now come up with one innovative idea. What they said, we are going to give this billing machine. Only through billing machine they should give a tokens. They should not give manual chitty and other things. So around 20 lakh machines were ordered. They distributed across Karnataka. Month one, superb collection happened. Month two, slightly there was a downfall. Month three, there was like, the trend was coming down. Month four, it went back to the normal phase. So they went down to the field to understand why they're what is happening. So they say, sir, the billing machine is okay. Month one it worked. Month two it didn't work. Why? So water fell into the machine. Machine is not working. Said the rat came in the night. It has cut the wire, so machine is not working. Said this keyboard, no, one key is not working. So they made a way that they don't use this machine, right? So it's like no, we have traffic light. Exactly beneath the traffic light, you have a traffic police to control the traffic. What is the purpose of a traffic light when traffic police is not required when there is a traffic light? Similarly, is your tax administration in India. It's not that easy to monitor and control certain business. That is where this 9.5 came into picture, saying that you have this Swiggy, Zomato, right? Where this hotel business is there. Thanks to technology, people who have talent, there's no dearth of your opportunities. Person, like there could be a lady who's very good in making food. She makes a food, she packs it, someone comes and picks up. So she need not have a name board. She should not have a big commercial place. You should have a kitchen, you should make, people will come and pick it up. Catching hold of those individuals or hotels for the tax officials is a big challenge. Now imagine this Swiggy and Zomato. There would be like in and around, like assuming right now we are sitting in Jainagar, we would know hardly 10 to 15 hotels when we visit physically. But when you come on to this Swiggy and Zomato, there will be 50 odd. Physically, what I say is 10. But online, 50 odd hotels are there. Now, this is the way the business got expanded. So government said, I'll not catch hold of those business people because it's being sold to a platform. So this aggregator, this platform fellow has an obligation to collect and pay directly to the government. So when I pay the tax, that doesn't go to the hotel, that goes to the aggregator. Aggregator in turn deposits with the government. Look at the small change in the taxation structure, how money is being secured in a complete protected manner. Reason, these e-commerce aggregators, they have IT platform. They cannot play around with IT platform. So there is a detailed audit which happens where you have this audit log and all. Any change they do in the backend, they get to know that this is what happens. And connected with this one, again, live case which happened. Uh, Again, this was in sales tax era. There was one restaurant where sales are having very superb, like very renowned hotel. When they file their returns, the turnover they disclosed, the actual business was not tallying. So this officer was a little curious to understand what is actually happening. He sat 2, 3 days in the hotel. He saw all billings were given by token, but still that not the turnover, what he discloses, what actual sales happened, doesn't tally. So what they have done, they have lifted this billing machine. They took to the IT fellow and they did a detailed understanding. So there was a programmer who was from Kerala who wrote a program. End of the day, when they do the batch run, some lines of the sales will overrun, get overwritten with the other data. So assuming I have 500 transactions, some 200 transactions get wiped off when I do the total run. And he, to showcase market himself, he has written developed by Korean Calicut. So that fellow marketed himself in the program, saying that I did the development of the program. Then they realized that there are people who use the software, but still they have a mechanism to override their turnover. So this is where they had this suspicion. We had this data log, which was introduced by our Companies Act. Enabling data log is mandatory as per Companies Act. Why? They wanted to understand, sitting in January, what entry you have done for April, what entry you have done for May. So they wanted to understand all your backdated entries by enabling data log. Now, this is one feature. If you don't follow, there's a heavy penalty. So even this IT GST offices also strongly depend on this e-commerce aggregator for this particular collection of taxes. Coming back. In this disclosure, what I have written 1, 2, 3, 4, the fifth limb is that ideal limb where I disclose. So much is my turnover, where tax is paid by e-commerce order. Tax is paid by e-commerce operator. So when you look at my turnover, like example, this hotel business, I could have a hotel business where I have a restaurant, people who come and no self not self service and service mode is there. I collect the tax. There's one more what you call parcel counter where Swiggy Zomato is paying their turnover. So this is one turnover. Self service is second turnover. Service is the third turnover. Out of these three, 1 and 2, I'll pay the tax. The third one, e-commerce operator directly pays the tax. This is my overall disclosure with respect to GSTR 3B.
Small clarification. But, oh, is there mean a non-tax fees?
Yes,
Non-tax fees, something like alcohol.
petrol, diesel.
What is non-GST?
Non-GST supply is your Schedule 3 transactions where government said that it is not subjected to GST. It is subjected to something else. Like example, sale of land, immobile property. Immobile property is subjected to state levy. Central government has no jurisdiction over there. Like Article 246A. You remember Article 265, authority to levy tax. So there are certain elements of transaction which have a jurisdiction only with the state government. Like example, liquor, state excise. No way central government can levy tax on that. So that's how government has designed this Schedule 3, saying that these are the transactions, no GST can be levied. I'll show you those transactions. Government said that, look, these are the transactions, activities are transactions which shall be treated neither as supply of goods nor as supply of services. So it is neither goods nor services. First example, services by employee to the employer in the course of or in relation to his employment. So this is not subjected to GST. Uh, we come across this particular transaction when we file income tax return. Most of the time when we file individual IT returns, there will be HNI clients who would say, I get 5 crore as salary. Now, this gentleman who draws income of 5 crore, he would also have mutual fund income. He would have interest from savings account, from deposits. He would also have done a consultancy. So there are multiple, like no 5 heads of income: salary, house property, PGBP, other source capital gains. So when I do individual IT return, now I need to know What is taxable, what is non-taxable. So non-GST is something where salary comes into picture. Now, many times, people ask this question. Like, I'll give one simple example to have understanding. Section 22 talks about your turnover, aggregate turnover for the purpose of registration. For the purpose of registration. Now, let's take an individual. Say Mr. X scenario. Mr. X has got salary, say 50 lakh. House property rental, 3 lakh. Then interest income, 2 lakh. Then some consultancy, say another 3 lakh. Put together 5 plus 3, 8, 58 lakh. Assuming this gentleman happens to be in Karnataka. Now, for Karnataka, the threshold limit is 20 lakh. Rupees 20 lakh. So question comes here, sir, because the total income is 50 lakh, should he register? If he registers on consultancy, he has to pay GST. Interest income, no GST. House property income, if it is commercial, GST. Residential, no GST. Salary, the Schedule 3 transaction, no GST. Now, this is a point of worry we have. But keep in mind, aggregate turnover, they say taxable, exempt. So this does not talk about non-GST. Non-GST is nowhere discussed in my aggregate turnover definition. Let's have a look of that definition. This is my aggregate turnover definition. Means aggregate value of all taxable supply. So first element is taxable supply. In that we saw rental income, consultancy income. Rental may be a taxable supply, may be exempt supply. Consultancy is a taxable supply. Excluding value of inward supply on which tax to be paid on reverse charge. They're saying that I have an obligation to pay under reverse charge. Remove that. That is not required. So one is taxable supply. Second, exempt supply. Exempt supply, again, there is a definition. I'll come to that also. Then exports, export of goods or services. So taxable they say, exempt they say, exports they say. Or interstate supplies of persons having same PAN, like stock transfer. If at all there is a stock transfer, that needs to be included. To be computed on all India basis, but excludes CGST, SGST, excludes tax. That is what they say. Now let's look at this definition called exempt supply. Exempt supply means supply of goods and services of both attracts nil rate of tax or which may be wholly exempt from tax under 11 and includes non-taxable supply. Non-taxable supply, that is something which is not subjected to GST. Let's see that definition also. Non-taxable supply. Non-taxable supply means supply of goods or services which is not leviable to tax under this act, under IGST Act. What is not subject to levy? Petrol, diesel, alcoholic liquor for human consumption. This is what they have excluded. Now, what is happening? From one definition, we have traveled to three definitions. A simple definition of aggregate turnover, when we read a definition, when we come across taxable supply, now we need to see whether is it defined. Exempt supply, whether it is defined. So we need to read each term whether it has been defined. If it is defined, we need to go strictly as per that. So coming back, for the purpose of your aggregate turnover, I'll just erase this. Now this is your total income. I'll say total income. Now, for the purpose of aggregate turnover computation, salary is my schedule 3 transaction. So it is neither supply of goods nor supply of services. So it will not participate in my aggregate turnover computation. House property rent may be commercial, may be rent. So it could be either taxable or it could be exempted. Does it participate? Answer is yes. It participates in aggregate turnover. Interest by way of exemption notification, this is exempted under GST. Exempt supply, it participates in aggregate turnover. Consultancy, this may be a taxable income. So this also participates in my total turnover. 1, 2, 3. So for the purpose of aggregate turnover, what is my total? 3 plus 2, 5. 5 plus 3, 8. So 8 lakhs happens to be my aggregate turnover. Should I register him in GST? Not required. Should he need to pay GST on consultancy? Not required. So this is where that schedule 3, what we started, aggregate your salary. Services by a employee to the employer in relation to employment. This is schedule 3. That means not goods, not services. Does not get considered for aggregate turnover. Services by any court or tribunal established under law. So if you're doing a GST, when it's in courts and tribunals, we don't do anything, but any services given by them, like when we pay court fee, tribunal fee, when I file any application, like no tribunal, there is a 1,000 rupees registrar fee, 5,000 registrar fee. So those elements, they say it is not a service. Then functions performed by MP, MLA, no, members of panchayat, municipality, these salaries what they get paid, or the functions which are done, the money collected by them. We pay municipal tax, we pay local taxes. That they say not subjected to neither supply of goods nor supply of services. Then funeral services of funeral, burial, crematorium, mortuary, including transportation of the deceased. Under service tax era, this was subjected to service tax. They made an attempt to levy a service tax on this. They made an attempt to levy a service tax on this. The opposition party made, no, they made the sky to fall in the parliament. Immediately they have removed this. What they said, no, there are high society people, even the funeral they do in a big way. Why that should not be taxed? The government didn't spade even that deceased when they pass away, because the funeral is celebrated in a big pomp. So they wanted to levy service tax on that, but they did a big blunder. Within a week's time, that was withdrawn. So this, by default, it is a non-GST supply. Sale of land and building, this is state levy. So because it's a state levy, not subject to goods. Actionable claims, other than specified actionable claims. You remember this interest in like no, as a partner, I get a right to partnership firm, right to profit. Now that's an actionable claim. Like futures, derivatives, like no, I participate in some options trading where I get a right for futures. So that is also an actionable claim. Sale of goods from a place, this is important. Sale of goods from a place in non-taxable territory to another place in the non-taxable territory without such goods entering into India. We call this is a high sea sale, or this non subjected to Indian waters. Like example, say there is a seller, there is a seller, there is a buyer, and there is an agent. Let's take example, nuclear related equipments. Seller is in, say, Russia. Buyer is in, say, Iraq. The agent is there in India. Buyer says, I need particular requirement of supplies. Agent does a verification and finds that there is a seller in Russia. So these goods travel directly from Russia to Iraq, but I get my income commission, whatever it is called, in India. So when there is a transfer of goods from non-taxable territory to non-taxable territory without getting into India, they never travel to India and they never go out of India. Since this is not coming into India, entire this income, they wanted to call Schedule 3, neither supply of goods nor supply of services. Supply of goods from a place non-taxable territory to another place in non-taxable territory. Then supply of warehouse goods to any person before clearance for home consumption. Now we had under the customs law bonded warehouse. So when I import the material, I don't bring it to the domestic tariff area. I keep in a bonded warehouse. From bonded warehouse, I sell those goods. That is not subjected to GST. Supply of goods warehoused in a SEZ or in FTW to any person before clearance of for exports to domestic tariff area. This is where sale from one agent to another agent happens. Like I import the goods, I put it in a bonded warehouse, I sell to Venkatesh, Venkatesh sells to Nitish, Nitish sells to Sumit, Sumit is a person finally brings to the domestic tariff area. All those transactions which happens in a warehouse not subjected to GST. Supply by way of goods by consignee to any other person by endorsement of documents of title to the goods after the goods have been dispatched from the port of origin located outside India, but before clearance for home consumption. We call this as high sea sale. So that is also not subjected to GST. Activity of co-insurance will skip this, reinsurance will skip this. So these are the transactions they are saying Schedule 3 transactions. This is where our non-GST supply Schedule 3 comes into picture. Clear is it? Now, coming back. Here we have, having discussed all this, automation is something which is a main point, right? So here there's a connecting dot. ITC, what I pay under reverse charge, whether I actually paid. Did I pay this tax and did I avail this credit? So they wanted to cross check on this particular thing. So for this purpose, again, they brought one more ledger called RCM, output tax, and ITC avail ledger. They gave a name for ITC RCM ledger. RCM liability ITC statement. This is what they were talking about. RCM liability ITC. So what is your liability? And what is your ITC avail? This they wanted to track on a monthly basis, like your ECRCS. What is another ledger we discussed yesterday? We discussed ECRCS, IMS. Only these two ledgers, right? Only these two. So automation for reverse charge also they have brought into picture. So here I'll show you GSTR3B. GSTR3B, let us take for a particular month. Now, this is my form GSTR3B way, table 3.1, which talks about your 3.1 talks about details of outward supply and inward supply liable for reverse charge other than 3.1.1. So outward taxable supply other than exports, nil rated, exempt. So this is something purely taxable activity, clause A. The turnover on that IGST, CGST, SGST. Similarly, outward taxable supply, which is exports. So on exports, what is the value? What is the IGST you want to pay on exports? Outward supplies which are exempted or nil rated. Third limb. Fourth limb, inward supplies liable to reverse charge. Non-GST outward supply. Non-GST outward supply is your Schedule 3 transactions. So if you look at this, what we started, taxable they have covered, zero rated they have covered, exempted nil rated they have covered, non-GST they have covered. Now this is something which is left out, right? Now this is covered in a different table. Look 3.1.1. Details of supplies notified under 9.5 and corresponding provisions of IGST, where they say taxable supplies on which e-commerce operator pay tax under 9.5 to be furnished by electronic commerce operator. This is clause 1. Clause 2. Taxable supplies made by registered person through electronic commerce operator on which electronic commerce operator is required to pay tax under 9.5 to be furnished by the registered person making supplies through e-commerce operator. So if I'm a hotel person, I will fill in clause 2 my turnover. There is no tax. You can say nil, nil, nil. So in case Swiggy, Zomato, they have to file their 3B, they will mention this one over here. Under 1, they'll say, this is not my turnover. He'll say, this is a turnover of that hotel fellow. But since government said I have an obligation, I'm paying tax on this. So in addition to, if you look at 3.1, A is my P&L income, B is my P&L income, C is my P&L income, E is my P&L income, and 3.1.1, this clause 2 is my P&L income. So there are 5 sources which is from P&L account. One is your taxable supply, then exports, then exempted, nil rated exempted, then you have non-GST. The final is your e-commerce operator, supplies made through e-commerce operator, right? These are the 5 heads of income which I'm showing in my GSTR 3B. Any doubts? Services advances, I'll show in your A, taxable supplies, which is a balance sheet item. Ojaswita, Repika, Vishal, are you clear so far?
Yes, sir.
Okay. Next. We have inward supply liability to reverse charge, 3.1D. Now, this is where automation ledger brought in. Government want to know how much you have to pay on your reverse charge and how much you're going to claim input tax credit on import of service or inward supplies liable to reverse charge. So there is 4A2, 4A3 ITC avail. There is one output tax paid under 3.1D. So this is where this automation was brought in, 3.1D. Government say, what is the tax you paid under table 3.1D? And what is the ITC you have availed in 4A2 or 4A3? Now, 4A2 is your import of service. 4A3 is domestic RCM. Domestic reverse charge mechanism. Now, why government is keen on this? This output tax, which is payable under RCM, this has to be paid. This has to be paid through cash ledger. I cannot pay through credit ledger. And once you pay, then you can avail your input tax credit, right? So month 1 output tax, say availment. My availment can be done in month 1 or month 2. I can do the availment in month 1 or month 2. Few companies have a mechanism which is coming from service tax era. Under service tax, pay in month 1, avail in month 2. This is how they used to have a practice. Assuming this month 1 happens to be March, my availment happens to be in April. So always, like, when I look at a particular financial year, say 23-24, my payment, I pay say 2 lakh, I avail maybe around 1,80,000 or maybe 2,20,000. Now, reason this March and April is going to disagree between these two. So there is a disparity with respect to payment and availment. For that purpose, they brought this particular control saying that I want to understand how much you have actually paid, how much is what actually you have availed. So for that purpose, I'll show you this Excel file where like opening balance. I have taken this for the period October, November, December. As on October, my opening balance, add an opening balance of say 81,000, 81,000 CGST, SGST. During the month of October, my liability, how much I have paid. Say I have paid 70,000 IGST, 46,000, 46,000 CGST, SGST. Then ITC claimed under 4A2. 4A2 is with respect to import of services. So there is no CGST, SGST. It will be only IGST. This is one column. Then ITC claimed under 4A3. Here you have this IGST, CGST, SGST. I'll put in different. Then your closing balance. Now, for the month of October, if you happen to see, now 70,365 is my liability which I have paid. I have claimed input tax of 70,000 IGST. I also claimed 46,000 CGST, SGST. Now, because there is an opening balance of 81,000, let us cross check here. I have an opening balance of 81,000. IGST is 0 plus liability what I have paid is 70,000. I can avail opening balance plus what I have paid. From that, I am deducting minus how much I have availed on account of 4A2, 70,000. Anything available in 4A3, nothing is it. Minus 4A3. The balance is 0. Cross check. Similarly, let's do for CGST. My opening balance of CGST I had is 81,000. To this, if I have paid anything, during the month I have paid 46,000, right? So from this, how much I can claim? On account of 4A2, there is no CGST. On account of CGST, here I have 46,000. So I have a closing balance of 81,382, which matches with your closing balance over here. So this is how the government is going to cross-check what is your liability, what is the input tax you have taken. In case if I get a negative balance here, government will ask me to pay this. Why there could be a negative balance? Any reason? Clerical error. Like, no, what I have liability, assuming I have paid 46,000. While doing a data entry here in 4A3, this is ITC claiming in 4A3. Instead of 46,000, 64, like clerical error. I should type 46503. I type 64. Let me just type this 64503. 64503. Let me see what is output. Like expected is 81,000, but actual you have got is 62,000. There's a gap of 18,000. Now, in audit, we have this technique. See, 46 I have entered as 64. Correct? So the difference of these two is 18, which is perfectly divisible by 9. So anything which is divisible by 9, it's a clerical error. This is what we do. We say, like, let's take one more example. Say 81. I've entered as 18. So if you look at the gap, 63. 9 7 are 63. So whenever you have a difference, and if you divide by 9, you get an exact divisible factor, then that indication that in auditing, somewhere a data entry mistake happened, because of that, we have this difference. So this is one audit tool which we use for finding the differences. Coming. This is my automation with respect to reverse charge mechanism, right? Coming back where we started, we have understood output tax, we have understood reverse charge mechanism. Now we will go back to this input tax credit. Input tax credit, now government wanted to understand your ITC, your input tax, they wanted to understand your source data. This they have made into 5 divisions. 1, 2, 3, 4, and 5. First source is your import of goods. When you want to avail input tax credit, please disclose only in 4A1. This is your table number 4A. Under 4A, first table will be your import of goods. Second table is your import of service. Third table is your reverse charge mechanism paid, which is your domestic transactions. Fourth is your input service distributor. Any ITC you claimed on account of ISD. Fifth is your ancillary, all other ITC. Wherever I don't fit 1, 2, 3, 4, all other ITC. That's how the nomenclature came, all other ITC. Now, here, when you say import of goods, to claim my input tax credit, the document which is relevant for me is your bill of entry, right? So this bill of entry, this comes either through customs or courier. So courier bill of entry or normal customs bill of entry. So we have a source called ICE gate. So whenever I pay customs duty, I discharge my customs duty, which is recorded on the ICE gate portal, that gets traveled to GST portal. Now this is where integration. Now customs is under Ministry of Finance, CBAC is under Ministry of Finance. Now two different divisions. One is CBAC, one is customs. So there is a data exchange which happens between these two portals, where whatever customs duty I have paid, that gets traveled to my GST portal through a bridge kind of thing. In case if there is no data, there is a fetch option. Using this fetch option, where I enter my bill of entry number and all, the data travels to the GST portal. So whatever I have claimed as import of goods, they expect, do you have a bill of entry? It could be a normal bill of entry, it could be a courier bill of entry. Then import of service. This import of service and this RCM, these two, in table 3.1D, did you paid your output tax while filing your GSTR3B? You can remember here 3.1D. So this is a source for them. If they add 2 and 3, does it match with your table number 3.1D is a cross check they are going to do. Now, As an auditor, how do I know I have paid tax under reverse charge properly? Reverse charge, RCM, I have two mechanisms. One is goods, another services. Goods notified have to pay tax under reverse charge. Similarly, services, import, domestic, notified. Please keep in mind, only when the goods are notified, only when the services are notified, I have to pay tax under reverse charge. If not notified, like no tax paid on goods or services not notified, then there is no authority. Under Article 265, read with Article 246A. Please keep in mind, when there is no levy, when there is no authority, it cannot be called as a tax. Whatever I have paid, IGST, CGST, SGST, when there is no authority, it cannot be called as tax. Correct, no? So that particular amount, what I have paid, which is not notified, has no authority. Now, question comes, can I claim input tax credit? Sir, I don't know that I should not pay, but I have paid by mistake. A classic example, say director's salary. Under GST law, services received from a director, I have to pay tax under reverse charge. But direct salary paid to a director is not a service. Schedule 3, neither supply of goods nor supply of services. Said, I don't know that director's salary is Schedule 3 item, but by mistake I have paid. Every month 1 lakh salary. On 1 lakh 18,000. So when I paid 18,000 and a reverse charge, can I claim ITC? Answer is no. I cannot claim input tax credit. Reason? When it is not tax, not a tax, where is the question of input tax credit? There is no question of input tax credit. So now what is the remedy I have? So remedy is to claim refund. To claim a refund. Question comes, will the GST department give a refund? Easy that I'll claim a refund. Now, when we say to claim a refund, we have to write to the GST officer that, look, under Article 265, read with Article 246A, you don't have an authority to collect tax. Correct. So as a state, as a central government, as a union territory, when you don't have a power, what I have paid to you, how can you retain that? You have an obligation to give back to me. A simple example for us to correlate. We go to a shop, we buy an article. So this article, I'll ask, what is the value? It says 100 rupees. I gave 200 rupee notes. Now, what is the value of this transaction? 100 rupees. The excess 100 rupee note, what I have given by mistake, the shopkeeper doesn't have a right to retain. He has to give me back. Similarly, a state authority, when someone has paid something which is without authority of law, they cannot retain that. They have to give it back to the person who has paid that tax. Okay? So this is where we need to keep in mind reverse charge mechanism. Only notified goods or only notified services pay tax. Now, sir, how do I know it is notified? My answer is read the notification. No other choice. There is a notification 3 of 2017 for goods, 13 of 2017 for services. I have to read. Any services which are notified, pay that. If not notified, don't pay for that. Now, I'll give one example where we have a difficulty with respect to transportation. we call GTA, Goods Transport Agency, transportation. Now the question comes for transportation is, like if you look at the service providers, list of service provider, there is a tax paid by service provider. There's a tax to be paid on RCM. If we take example, say VRL, Gati. These are two service provider who does a transportation. VRL says, I will pay tax under the forward charge. You give me a money to me. This money I'll remit to the government. Gati, on other hand, says, no, I'm not going to pay tax. This tax, no, I will ask you to pay to the government. So either service provider will pay or service recipient will pay. Now the challenge for us as accountant is when a bill comes, like here I get a bill for 1 lakh. On this, there is a GST of 5,000. On this, the bill is only 1 lakh. So how do I account for this bill? Transportation, forward charge, account, debit to VRL account. Transportation, RCM account, debit to VRL account. I need to have transportation ledger specified clearly. So when I'm doing accounting, when you look at your P&L account, we have, say, in general transportation. Now, assuming in this, I have 50 lakh is the total expenses spent during the year. Now, again, I have to split this into forward charge, reverse charge. So it becomes a complicated thing for me. So what we need to do is wherever there are services which are notified, we need to keep in mind what are those services which are under forward charge, what are under reverse charge. So have your GL created in such a manner that the moment I look at the GL, oh, this is the money accounted during the month, I have to pay forward charge. This is the money I have to pay under reverse charge. This will help us to compile what is the value of expenses on which I'm going to pay tax under reverse charge. Before I go further, Ojaswita, Repika, Vishal, do you have any doubts on the discussion so far? Coming back. RCM is the third limb we have discussed. Fourth is input service distributor. Now there is a form called GSTR6 through which this credit gets auto-populated automatically. Whatever is the credit, I account and I'll claim this particular credit. We'll have one separate session for ISD, little time consuming. Then whatever you have not fitted over here comes in its over here called all other IDC. In general, auxiliary, all other sub-elements. One thing you need to keep in mind, the document for import of goods is bill of entry. The document to claim for 2 and 3 is self-tax invoice. Section 31, subsection 3, clause F. Under section 31, there is a necessity that in case of import of service, in case of RCM, I need to issue a document called self-tax invoice. This self-tax invoice is relevant for me to pay and claim input tax credit. I'll share one format of self-tax invoice after this class. For every services, we need to prepare this self-tax invoice. For ISD, I have a ISD tax invoice. I call ISD tax invoice. All other IDC, it could be a tax invoice or it could be a debit note on the basis of which I claim my input tax credit. This is my table number 4A. 4A. Now, this ITC, what is generated? 4A is my ITC made available. Now here, there is a auto population, data auto populated. For your 1, 2, 3, 4, 5. Now, let me put source, auto, manual. Source, say import of goods, import of service, domestic RCM, ISD, all other ITC. Now, is this auto-populated? Answer is yes. What if the data is not auto-populated? I can do a manual entry for data not fetched from IceGate. Now, like there is an integration. So whenever there is a dependence on an external source, technical issues, data may not travel. So in case if there is no auto population, that data I can do a manual entry. Answer is yes. But for this, have the bill of entry as a reference. On the basis of bill of entry, I am claiming the data. So auto population plus I will say manual. Now, source, second is import of service. Import of service is not auto-populated. Reason, service provider is outside India. He doesn't have GST. So communication to GST portal does not happen. Because it is not auto-populated, I need to do manual entry. This is my second source. Third limb, that is your RCM domestic, partly automated. Like example, Gati. Gati would be registered, might be registered under GST. He'll say, I gave services to XYZ Limited. XYZ Limited should pay tax under reverse charge. In case if the service provider is registered under GST, who insists that the recipient should pay, and he files his return saying that, sir, I gave a bill for 1 lakh, this XYZ Limited to pay under reverse charge. On the basis of his return, it may get auto-populated in my return. So if it is partly automated, what I have to do? Verify books of accounts and do manual data entry. I have to do manual data entry with respect to RCM domestic. ISD, it is automated, no manual intervention. No manual intervention. Now, 4A5. Now, 4A5 is automatic. Manual, maybe yes for reclaim credit. Like I have parked in 4B2 in any of the months. I want to reclaim that particular credit. I'll do a manual entry. Also, add back credit note if original invoice rejected. Suppose I have rejected invoice, subsequently a credit note came. I can add back that particular, either reject or I can add back. So anything can be done with respect to 4A5. Now this is where we need to understand. Now whenever there is a manual intervention, this is okay. If I do manual intervention, you get a red color whenever we alter the data. For this, we need to have reconciliation. What is auto-populated? What is that added? Along with that reconciliation, you have your supporting documents. Now, these are important with respect to my manual interventions. Now, I'll show you GSTR3B and this electronic credit ledger reclaimable statement also. For a particular month, again, we have taken this from October to December, where there is an opening balance. How much is opening balance in credit ledger? This is a opening balance in my electronic credit ledger, which is like your temporary warehouse. So in a warehouse, I have IGST 23 lakhs, CGST 78 lakhs, SGST 78 lakhs. Now for the month of October, for when I file GSTR3B, from table 4A5, there is a data which is getting auto-populated, all other ITC. So for October, they say this is a credit, I have auto-populated data. Subsequent to that, for this month of October, so much of credit I am pushing from 4A5 to the warehouse. This is coming into the credit ledger. Reclaim 4D1. When I update 4D1 from my reclaim ledger, so much of data going back to the credit ledger. 20 lakhs, 62 lakhs, 62 lakhs. Let's look at this data one by one. Say for the month of October, 4A5 data. 1 crore 30 lakh, 87 lakhs, 87 lakhs. 4A5. 1 crore 30 lakhs, 87 lakhs, 87 lakhs. So when I file my return from here, there's a window which is getting updated in my Excel. Similarly, 4B2. This is where I do a manual entry. I'm saying that, sir, so much of credit out of 1 crore 30 lakh, 20 lakh 68,000, I don't want to claim. Maybe in the subsequent month, I want to claim IGST. Similarly, CGST, 16 lakh 56,663. So 20 lakhs and 16 lakhs. Let's look at the credit ledger. In my credit ledger, for the month of October, 4B2, 20 lakh 68,000, 16 lakh 16 lakhs. This we are not doing any manual entry. In the back end, system is doing this calculation. So the based of 3B, this is what it has captured. Now 4D1. Now this is where it was updated. Let's check the 4D1. 4D1. Please keep in mind this 4B2 is a manual data entry. Four B2 is what I'm going to enter manually. Now, when I enter manually, I need to have a working for this, which all invoices I have kept it pending for availment. Similarly, if I want to reclaim in the current month from the previous months, again, this is what I'm updating manually. So this is outward entry, this is inward entry, right? 20 lakh 24,000, 62 lakh 27,000. 20 lakh, 62 lakh, 62 lakh. So to cross check this, let's have a formula. So my opening balance, IGST, already available in the store, 23 lakhs. My entry to this credit ledger will happen through 4B2 or 4D1 or 4A5. Entry into the credit ledger comes through 4B2. I don't want the credit, right? So here 4B2 for the month is 20 lakhs. And out happens on account of 4D1. This is my 4D1. You can say 24 lakh, 25,000. This is your closing balance. this and this matches. So this is a check what government has given. Any point in time, the closing balance here should not be negative. So this is a control what they brought in your GSTR 3B. Ojaswita, Repika, Vishal, any doubts in this disclosure? Are you clear? Okay. So 4A we have understood, 4B. Now 4A is the source data. 4B is where I'm going to tell to the government no interest to avail ITC. This is called 4B1. 4B2 need to assess the eligibility of ITC. So the government said that you don't have an interest to avail ITC. Why you don't have interest? So this is ineligible or it is block credit or I don't want to avail. I don't want to claim input tax credit. Any of these reasons, I will do the data entry in 4B1. Now this is where I do a manual entry. 4B2, again, this is also manual entry. I need to assess whether I'm eligible, whether I can claim the input tax credit. This is called 4B2. This is linked with your electronic credit ledger reclaimable statement, ECRCS. So whatever list I'm going to get here, 1, 2, 3, 4, 5. This entire total, the total of 4A1, I would say here. 4A1 total, I assess in 4B. Let's take one example. Say import of goods. I have import of goods which I have imported on sample basis. I have my supplier abroad. I have my customer domestic. Now, my supplier gives me a sample. I can sell to a customer only when customer is also willing to approve the product. What I have received as sample, I am going to give this as a sample. But for the sample, I need to pay customs duty to get the material. Since I paid the customs duty, it came in 4A1. But I'm going to give this as a sample, not on account of business. So I'll not gift or without consideration, I cannot claim ITC. So what I have given, I cannot claim ITC. What I'll do, whatever total I'm having here, out of that, I'll declare in 4B1, no interest to avail ITC. Why? Ineligible, block credit. So I do data entry over here. So this is where your 4C, the net ITC, gets calculated. 4C is your 4A minus 4B. This is a net ITC which gets credited to electronic credit ledger. This ITC gets credited to my electronic credit ledger. 4C is 4A minus 4B. 4C is your 4A minus 4B. Next. Now, government needs MAS. Like the business had MAS, they also need MAS. Where this 4D comes into picture. 4D has got two elements. One is your availment from ECRCS. How much you have claimed in 4C, I want to know from your warehouse. Now, that electronic credit ledger is like a warehouse. So during the current month, assuming you have claimed 20 lakh, out of that 20 lakhs from warehouse, how much you have taken, they wanted to ascertain. Second is ITC not available on account of place of supply. ITC not available on account of place of supply. Example, hotel stay. Like from Karnataka register person travels to Maharashtra, Bombay, he takes a hotel accommodation. So there is a business meet, 10 days he stayed in a hotel, per day 5,000, 5 into 10, 50,000. On 50,000, he has paid, say, 2,500 GST. Now, when he pays the 2,500, SGST, CGST of Maharashtra would have been paid. I am in Karnataka. Karnataka is SGST, CGST, Karnataka. So that SGST, CGST of Maharashtra will not travel to Karnataka. That is the reason 4D2 gets data operation that out of your total purchases, 4A, 4B and all, so much of credit didn't travel to Karnataka. It sustained, retained in Maharashtra. So this either semi-automated, like few data gets automated, few data we need to enter on account of failure of this data. So this is your MIS, informative thing to the government. Are we clear so far? Table 3 is your output tax. 3.1D. I would say 3.1. Entire this table, what we have understood here is your table 3.1. 3.1 is your output tax plus reverse charge 3.1D. So here you get, government will get to know how much money I am going to get from, say, Praveen. 4C, you will get to know how much is the tax available with Praveen, right? So this table 3, table 3, table 4 gets summarized in table 5 for payment of tax. Let's say that table 5 also. Table 6, it is getting summarized. Table 5 has got inward purchases, that is the purchases on account of exempt, nil rated, non-GST. And interest late fee from the previous month is getting populated over here. 6 is where this payment which is getting populated. Amount payable, which is from table 3. Any negative liability, by mistake, if you have taken any negative, more tax, that is that negative liability which is being shown here. Net tax payable, this places a total payable. Amount paid through input tax credit. Amount paid through cash. So this, along with this interest, if any interest you want to pay because of late payment, that gets paid here in cash. Late fee, that is delay amount, gets paid in cash. This is your table 6 for payment of cash. Breakup of liability declared. My IGST, CGST, SGST, that liability is getting declared. MAS point of view. So this table 6 is something where system is designed, automatically it will pick up IGST, CGST, SGST. We need not break our head. Automatically the data is captured here for payment of taxes. So this is something which we need to understand.
Populated after filling those columns.
Yes.
Like ECR.
3 auto-populated from GSTR1. 4 auto-populated and manual what I have to fill. Yes. So 3, 4 if I fill, 5 is auto-calculated, 6 is also auto-computed, where there's a button, set of liabilities, where this internal adjustment happens. Yes, yes, yes. So that is order where my 3B payment is going to happen. Reverse charge and supplies made under 9.5. This is for e-commerce operator. E-commerce operator, whatever they have paid, that gets populated. Coming back. Now, my GSTR1 is a source for table 3 with respect to taxable, exempt, zero rated supply, and non-GST. Non-GST. 3.1D RCM manual. All this data is auto-populated. Now, in case if GSTR1 any mistakes happen where my liability is not properly captured, I use GSTR1A to amend the liability. To amend my GSTR liability, I use GSTR1A where 3B gets corrected to that extent. Correct now? So taxable, exempt, zero rated, all that I'll bring over here. Now, one question here. So assuming we are filing GSTR3B per month 12. Let's say October, April, May, 6, 7. Let's take month 7. Month 7, let's assume October, I'm filing my return. Okay. Now I'm doing it for say 25, 26. This is month 7 of October 25. What if month 12 of 24, 25, any turnover missed out? Can this turnover be included over here? Answer is yes. I can include and I can pay taxes. So, like correction, they call this as correction. Correction of any mistakes. With respect to turnover, with respect to output tax, with respect to input tax. No, GSTR3B. Sir, I have taken excess credit. Now, using this excess credit, I can reverse through 4B2. Instead of GSTR DRC03, using my GST return itself, I can do that. Now, option 1, I can do through this particular thing, or I can do through DRC03. So, this corrections, what we have, as you said, option 1, I can do through GSTR3B. Option 2, I can do through DRC03. But my suggestion would be, we can do through GSTR3B, and this disclosure needs to be done in GSTR 9 and 9C. Annual returns. Any previous year. So when I file my GSTR 9 for 24-25, I would say that in GSTR 9, there are table 10, 11, 12, 13. Now these are the tables for output tax, input tax, which gets adjusted in the next year. So for disclosure of this mistakes, I can use recommendation, use your GSTR 3B for any of the previous year corrections done in the current year. DRC3 you can do, but I don't recommend DRC03. Coming back. 3.1D RCM. This is something which I need to manually update on the basis of my books of accounts. So when we file GSTR 3B, what generally we have a practice is, you have your trial balance. In trial balance, you have your sale related GL, purchase related GL. Make a fashion that you define what all GLs are relevant for RCM, your regular ITC. On the basis of this, you have your duties and taxes. Yes, duties and taxes ledger. So here you have opening balance, debit, credit, closing balance. If it is a like opening balance item, ITC which is carried forward. Now liability will be on the credit side, ITC will be on the debit side. So we need to have a mechanism to match current month transactions with the current month disclosure. Closing balance reconciliation with your that 4C what we have. What is the opening balance, current month, closing balance? So we need to have this checks and balances to reconcile my figures which are forthcoming into GST returns. With respect to outward supply, GSTR1 is the source. Now, with respect to purchases, my 4A, the source for this one is GSTR1, which travels to GSTR2B. This is one source. Second source, your bill of entry from IceGate portal, which also travels to GSTR2B. Apart from this, ISD, that is GSTR6, which travels to GSTR2B. Apart from this, IFF, any vendor who files their GST returns on quarterly basis, monthly, month 1, month 2, they do IFF. That is also the data which travels to GSTR2B. Now, wherever there is a gap, this is your auto-populating vis-a-vis books. When there is a gap, I would recommend there is a possibility avail manually or keep a track and follow. Now, avail manually, I would recommend only for bill of entry, that is 4A1 case. Since this is a bill of entry, technical issue from IceGate portal, it's not coming to the GST portal, we are not bothered. So avail this credit manually. With respect to other, this ISD or IFF, GSTR1 and all, I would say follow up with the vendor only when it gets reflected, avail this credit. Otherwise, don't claim. If we avail, risk of notice. GST department is going to send a notice where you avail without auto population of this particular data. This is something which I can do through common portal. In common portal, I can communicate with the vendor. There's an option. Communicate to vendor. Not IMS. Where vendor has defaulted in uploading the data. I can raise, raising a ticket, I can select the GSTN, give the details, it travels to that particular party. Now there is a evidence available on the GST portal that I have purchased, but that fellow has defaulted. That kind of thing, right? Last but not least, 4B2. This is your temporary credit ledger, electronic credit ledger reclaimable statement. The time limit for re-availment. The time limit for re-availment is as per section 16, subsection 4. That is till November of subsequent financial year, 30th November. 30th November of subsequent financial year, we have to claim this credit. So whatever I park in ECRCS, avail till 30th November. That means the October return filed in the month of November. If I don't empty that ECRCS balance, credit is gone. Now, reason, you remember there is a MIS 4D1, availment from ECRCS. Now, this is being monitored at the time of your GST audit. Whenever the GST audit happens, every month, no, they monitor. You picked from that warehouse. Now tell me, which month you put into the warehouse? Now, 23, 24, you have put into the warehouse. In 25, 26, you open the key. Then you say, boss, time limit is over, you cannot leave. So every money what you're going to enter, you need to have a detailed bill-wise breakup. This is the expectation from the GST department, right? So with this, we come to the end of our GSTR3B understanding.